Hey guys, Freaky Finance here. I was going to continue on the China theme, but lately they just keep rallying. It's like everyone all of a sudden decided China was a good thing. So I've just kind of pulled back on it a bit. There's some that I'm going to look at still, just when I'm going through. It's just 300 pages, and it takes a while to go through some of these Chinese companies, especially ones that have more complicated business models. So I'll probably do one next week. It depends. Right now, my personal life is very exciting. So I was like, oh, what should I do? I need to do something. So I was like, let's just do a long shot video. These are generally easier time-wise because there's not as much fundamental driven. This is more big picture, long term. And we're going to jump into this one. It's one of the exciting ones that I actually like longer term because the opportunity for a return is there. It's just how much are you going to get diluted by then. So you can still, the theme for this video is going to be you can still be right but lose money. I should say before we start that I do own this one. It's right there, AST SpaceMobile. I just started a small position. This is how, and this is important for everyone, this is how I get, because the channel's kind of gotten more viewers lately, I get questions about random stocks. And a lot of them don't really have a business, or at least they have a potential to be a business, but they currently don't. Like if I go into it, some of them are pre-revenue. This one is technically basically pre-revenue. That they're starting to scale a bit, but it's still going to be very lumpy and very capex heavy, which means a lot of free cash flow negativity. And with this free cash flow negativity, it means even if you're right, you can be diluted a lot in the short term. So that's what I want to point out with these ones. So how I'm going to play AST SpaceMobile is basically with every dilution round, I'm probably going to buy more. And the stock will probably get smacked, and they're going to have to reverse split, and then they're going to get smacked and smacked. I've seen this enough times that companies like this usually happens. Now, there are some unique things with AST, and there is some funding from the government there, but again, it's very close lips. So, and they do have a history of dilution basically on every rally. With that in mind, we'll jump into it. And I'm not against going long shots, right? But usually they're established companies like Alphabet, right? Or Airbnb or Pinterest or Uber, right? Companies that are technically not value, they're just high growth, and they had good scale when I look at the business model. And we were actually seeing that, and sometimes the market will sell them off, then we get a chance to buy them. But this one is not in that camp because the fundamentals aren't there yet. It's still very early on in this company's life. So it's more speculative nature is what I'm trying to say in this whole preamble. I put AT&T there. We're going to talk about their partnerships in a bit with MNOs. Anyway, let's jump into it. So what exactly is this company? It's basically geospatial satellites. What that means, they kind of stand in place. They'll be on a certain coverage area. They'll be linked with specific MNOs that it can service. Technology is kind of interesting. So basically, you can direct link to unmodified mobile phones and other cellular devices, so it should work interchangeably with your existing cell phone. So my existing iPhone, or if you have an Android, you'll be able to link directly. You don't need to buy anything special. One of the cool things with these guys' strategy is you need a lot less of them because they're a lot bigger and they're basically geospatial. They're going to move with the Earth. And they are partnering with existing infrastructure on the ground. So they're more working with the existing providers, so whatever your cellular network is. So in Canada, you have Bell, Rogers, TELUS. In the States, you can have T-Mobile, Verizon, and AT&T. And they're kind of working with the existing infrastructure on the ground to basically cover any blind spots, and as well as help in emergency situations and stuff like that. We'll talk to some of the business models in a bit. They do have a lot of partnerships. So that's one of the things, if and when they get all these satellites up and running, the capacity for them to scale is very quickly. What I mean by that is once they actually get the stuff up and in service, because they've partnered with all these people that already have all these existing customers, they'll be able to get a lot of revenue relatively quickly, back a lot of this upfront cost that we're currently seeing, and that's what investors have had to pay for. So that's when I look at earlier videos of this company, I'm like, oh man, these guys are just, they could be right, they're just early, right? They're just getting cut in half from dilution, and I've seen this before. Obviously, this is a little bit different because it is more exciting. But I've seen this in like exploration companies, especially in Canada. Right? It's kind of it's different than Odyssey because the payoff could be fairly larger, but you're still got that upfront just dilution. But they do have a lot of capacity here and a lot of partnerships in place to scale very quickly. once the satellites are up there. I thought this was just interesting to try to show how big these satellites are. This is actually the small one, Blue Walker 3. It's only 700 square feet. But you can see it's still fairly large. Now they're making ones, we'll go into it in a second just to see the square feet. I'm pretty sure it's 3 times or something like that, maybe even 4. It's just a lot bigger satellites. Ultimately to service a lot more people in a specific area and cover larger regions, so you need less. You don't need as many launches. So the replacement cycle might be a little bit better. I'd love to see how long the useful life is in space, but anyway, it's just kind of interesting to visualize. So the first couple of these are just visualization stuff. This is their strategy, and this is kind of how they're a little bit different as well from Elon's company, Starlink, in that they rely or have more mutually beneficial contracts with existing telcos, as well as Google obviously from the Android perspective. And that's not to say Starlink doesn't have partnerships. For example, actually partnered with Rogers in Canada, and I think T-Mobile is actually partnered with them in the States. But you can see AT&T Vodaphone. There's a whole whack of these guys. Anyway, they're also investing, so that's helping some of the dilution, some of the upfront financing cost. But again, you're getting access to capital at 5.5%, as well as with the sweetener convertibles. So basically, AT&T, Google, Vodafone, giving this company money to launch satellites. And one of the things I want to be clear about is that this company is the underdog. So its access to capital is worse than, say, Amazon, which has a competing product trying to come out, as well as obviously Starlink, because when you're Elon, you tend to have a lower cost of capital than other companies, at least at the current time, because a lot of people will blindly just give probably things that are linked to him money, right? So I'm sure the cost of capital is lower for Starlink than whatever this company is. I mean, they're paying 5.5 with sweetener. Sweetener's just the upside, so if the stock actually rallies, these guys will participate in it as well. They do have some interesting things here, but we know very little about it. Quasi-government, so agencies of the government have been in contact with them to also fund. Again, this could be huge for national defense, or even just in emergency situations, first responders, right? If the telco system goes down on the terrestrial side, you just, boom, satellites up, running, covering, right? It's just, and communication is one of the things that we all take for granted in today's day and age, how it's gone, right? Me included. So I do think this is interesting, but we just don't know how you measure that, right? You can't really quantify that. You don't know how much. You don't know the rates. You don't know who. Anyway, it is interesting, but we just don't have enough information to try to say, okay, well, there's not going to be that much dilution then because these guys are stepping in and putting up funding. And they do have some pretty cool stuff, right? Like they're unmodified phones, direct to device, and that's a friction point. So if you don't need to buy anything, and all of a sudden you just get a text saying you're out of your service range, do you want to link to a satellite for whatever it is, whatever rate that it says on the text, you just click the button and you're in, and you still have access, right? That's very frictionless. And I think that's one of the advantages of partnering with the MNOs. You don't need anything. It's just all of a sudden you're there. And so that's going to be huge in terms of like sales scale. That's one of the things I do want to be very clear on. The opportunity is very large once these things are in orbit. On the 10K itself, the business is very, usually I might see 3 paragraphs, but you can see this a page long, page and a half. But really, I've kind of explained the crux of it. But it's just a constellation of satellites in low orbit. I'm using low band and middle band spectrum by the MNOs, so AT&Ts of the world. We intend to work with the MNOs. Our vision is that the users will not need to subscribe to us directly, nor will they need to purchase any new additional equipment. Instead, users will be able to access the service when prompted on their mobile device, and they're no longer in range of land-based facilities of the MNO operator. They'll be able to purchase a plan directly with any of their existing mobile providers. We intend to seek a revenue-sharing business model for Space Mobile service with our MNO. So that's kind of where they want to go with this. You can see kind of their strategy. We'll just lay out the points, but if you want, you can freeze frame and read it. But it's basically the first one, probably the most important one, is developing the relationships with the mobile network operators. And this paragraph, or this sentence rather, will enable our partners to expand the coverage without limited incremental capital investment. One of the reasons why the larger networks haven't expanded into rural, say, or less so is because it's not cost effective to do so. Like, they're one of the reasons why the telcos have so much debt and why they've actually gotten cheaper as interest rates rose. It's just because they have to have all this debt to expand the network and keep the network running and capex, and you got to buy spectrum, and then so it's like constant. You're constantly paying things, so while you're generating cash, you're investing so much of it back in the business. Just for example, because I own AT&T, so it showed, let's say they make $40 billion in EBITDA this year, they're putting $22 billion back into America, right? Every year, like it's a large amount that they have to constantly keep putting in, and this would be a way to be like, you know what, we don't need to do that. We could just partner with these guys. And worldwide, this is way cooler because then you can get people that would never ever be able to get connected to the internet, right? I think that's probably cooler from a moral thing. But anyway, I digress a bit there. I thought this was interesting just for sale. Our next generation of commercial DB satellites, the Block 2 ones, are expected to be approximately 2,400 square feet in size, almost 3.5 times bigger than the Block 1. That's huge, right? That's 3.5 times this picture, which I wanted to show it. It's just funny, right? Just crazy when you think about the engineering required. This is probably, if you needed one thing from this presentation today, it would probably be this. It's just the how they're actually going to make money. Again, so we've kind of talked about this a bit, but we believe our business model is attractive. We'll be able to augment and extend their cellular broadband coverage to customers without having to build additional towers and infrastructure. We believe that Space Mobile service will provide MNOs the opportunity to increase monthly ARPU through the sales of additional services. Basically, do you want this unlimited coverage or whatever, and then wherever you go, kind of thing, in America, and then, or in Canada, say, and then basically you pay an extra $2 a month or something. We expect the AT&Ts of the world will market our Space Mobile service to their existing customers, the ultimate end users. We generally seek to negotiate a revenue sharing model in our agreements. Today, we have entered into 45 preliminary agreements, understandings with different MNOs. So this is pretty huge. The fact, now they're just memorandums of understandings, and we don't really know the terms of too many. We'll go into one, just kind of breaks how the revenue share would work, 50-50, but we don't technically know that all of them are going to be 50-50 or what's included in them in terms of the revenue sharing of this product. But you can see the strategy is to partner with them, not to compete directly with them. Now, at some point, it's probably going to be compete, but for now, it's not. And from the AT&T's of the world perspective, you're negotiating with a company that basically needs you. Like, they're on the ropes. They're only worth $600 million now, right? The public market's just totally eviscerated this company. It's one of the reasons why I like the video, do it now. But that doesn't mean it can't get eviscerated more because of the dilution. But what I'm trying to say here is that negotiating power of AT&T versus this company is probably very strong in AT&T's favor. Whereas, say, if they try some type of partnership with Starlink, Elon, it might not be as favorable. It might be more, you're probably going to come after our business. It might be more aggressive instead of partnership, like, right? Or even Amazon has a way stronger footing, obviously, $1 trillion company to negotiate with little $100 billion AT&T. So, what I'm trying to say here is, in this kind of setup, it actually favors this underdog from the multi-state, like the AT&T's perspective, just from a power perspective. But you can see here that the ad hoc, so if you leave, mobile subscribers will receive a text on their phone asking if they'd like to turn on the service, or you can just do an add-on subscription if you have a fixed monthly fee to add on the service as a supplemental service to their wireless plan, and you just roam onto the service network upon entering the area that doesn't have the cell tower coverage. And I think those will be the two. I mean, they do have some interesting ones here with aeronautical and maritime and military and government, which could also be something that helps them in this little bit right here where they need more cash to get these final things, the next series up, the next series. And then once you can actually make a commercially stable area where there's always going to be service, you can negotiate terms with these guys and start generating revenue, and that will help with the constant funding requirements of the current setup that the business has. Vodaphone, this is just the one where they actually show that they have 50-50 revenue share for the Space Mobile service in Vodaphone's exclusive markets. That's the only time I saw a direct one. It's possible that there's other ones, but this is the one that was clear that they have some here. And one of the things that Wall Street and analysts in general are going to have a hard time modeling this out is, what is this actually going to look like for every company? Is it always going to be 50-50, or some of the bigger telcos going to be able to negotiate these guys down more? How do they actually market the product when it's live? They push it aggressively, right? How quick does this actually take up? How many people actually subscribe to this unlimited thing, or do they just use it as ad hoc? These are all the things, right? That no one's going to actually have a clue. And so there's going to be an opportunity for a lot of money to be made at that certain point in time, assuming it is successful. In terms of competition, they flag a few, but in my eyes, it's SpaceX, Starlink, and then Amazon. They have OneWeb here as well, which is a competitor as well. And they're all in the low orbital networks. I just asked ChatGPT to explain the difference, and you can kind of see that AST does not require use of special equipment. Currently, Starlink still does, satellite dish and router to connect your satellites. Space Mobile is particularly appealing in rural or disaster-struck areas. Probably agree, you don't need to have anything set up ahead of time, right? Just turn it on. Don't need anything on the ground special. And this is true, so there will be less satellites because they're bigger satellites and they're moving with the planet. Whereas Starlink has the ones that are moving in orbit around the planet. Again, this is a key risk. I'm going back, I'm repeating myself, but I want this to be very clear. Like we can be right here. Maybe this underdog wins, beats out Starlink, beats out Amazon. It's the bee's knees. But you can still get diluted in the short term enough that it will take a while before you ever recover. So that's why you start very small. The size is very small, right? And then the next dilution round, you up it as you get cut in half, right? And that's how I play. That's how I'm going to play this, because I do think this is very interesting. The upside is there. It's just how much do you get diluted until that upside is realized. And that's really what I don't know. And then you could have anything happen. You could have the next round of satellites have an issue with launch, then this thing's getting cut in half anyway, or more. Right? There's so many things that could happen right now, early on in a company's life, that could severely impair it for the rest of its life. So that's what I want to point out here, and dilution here as a key risk that's listed. Important to note that, because that is the key risk in my eyes. Here's the income statement again. We're just really quickly, because there's nothing there. You can see pre-revenue, or if there's any revenue, very small. Doesn't cover the engineering services, right? Let alone G&A and R&D. So you are being diluted. How they're paying their engineers, they're paying it with your money, or with AT&T and Google's money, the partnership money, or with the government's money for whatever funding they get. And we've seen, especially since 2021, pretty much for 3 years straight now, it's just that investors don't want to invest in so much that they just want the upside from the investments, especially in these higher rate environments, right? I just think that's worth pointing out. The balance sheets, they actually did a raise. So again, if you're burning $220 million in OpEx a year, I would just run right it to like 60 a quarter. They kind of saw that they needed to do a raise. They did do one in January, and that's what shot the thing down last time. So now they got another 90 million. Yeah. So they issued some more shares, right? 93 million net of the 6 month pay. So not only did they raise 100 million, they had to give 6% to the underwriters, the bankers. We're just making money on this as you get more and more diluted. So the access to capital that just isn't there for these guys, right? That's really what the market's signaling. And it's so early, like maybe we're about to start getting some revenue numbers coming in to help this, but it's still going to take time. And you don't know how many raises you're going to need before then, especially as they launch. You have to pay the capex to launch these things. So you can see the cash burn's actually more than that, because losing money, some of its depreciation, you can add it back. You also have the next launch is coming up, right? So about a loss of 220, you got back to 54 million in non-cash depreciation, right? 150, whatever. And you have some inventory working noise both ways there, but to say 150 burn, but then you're burning another 120 on more capex to launch the satellites. So you need more money up front, and then you have to issue shares and debt to cover it. And then the last kind of positives and negatives here, because longer term, I think this is a very cool idea. There is the risk here too that they have been using Falcon 9, so again, competitor's product, to launch their satellites into space, which is another risk. Now there are other places they could use. But again, this could be an operational risk if they use to other places and they don't work. Or maybe Elon gives his Starlink company a better price than whatever they're providing to AST SpaceMobile. So there's that you should keep that in mind as well. Maybe their transfer pricing is a little risque. Anyway, you can see it's a despac too. So it was at $10 it despacs into the bubble of 2021, early part of 2021. This is the GameStop meme stuff. Shoots it up, quick double, and then it's down from 20 all the way down to $2. And this is dilution. So like all these big candles, you'll be like, oh, the volume's going up, and like, no, that's just more shares outstanding because they're constantly diluting you on the way down. So basically, they are building this company out, but it's come on the back of investors, and investors are basically getting eviscerated. And that trend, you don't know how long that trend goes for. It could go on quite some time. But it's really like, when do you think the revenue is enough to offset the OPEX? And even then, you still have to worry about the CAPEX. But once you start getting some of these MNOs online, you could start seeing the scale really quick here. It's just, do you survive, right? Or how cheap do you get diluted to? Like, what are the other financing options available to these guys just to bridge this gap? It's hard to know. So that's why it's hard to put any real money in here at this time for this company. But I would basically play it slowly and patiently every dilution cycle. Just revisit and think, where are they? Are they going to target? Are they behind target? Are costs higher than they expected? Is there any operational issues, right? Is competing products getting better? So they also no longer require anything extra on the ground to link to your cell phones. Anyway, there's lots of stuff to think about. But I thought this was a very interesting company, and thought we're sharing you guys. And it's easier for me to go through because I didn't have to go through the numbers, because there really isn't a fundamentally driven company at this point. You have to assume the future. And it's hard to actually know exactly what all these contracts are going to be worth, and as well as how low this thing can go in terms of you getting diluted, right? If they do a reverse split, dilute you again. I've seen it before, so I'm always have a suspicious angle on longer shots like this one. But this one does have a moonshot opportunity, right? If you're right, it could be very rewarding. And it'll be interesting to see how this stock reacts once interest rates finally start coming back down, right? Because maybe it's also the valuation's partially getting pulled down because of access to capital so weak for these guys. So it starts getting a little bit better, and they might actually see some anticipation in terms of valuation re-rate, especially for the terminal value, since the big weight on this thing relative to anything in the short term. But anyway, I'd like to know your thoughts. It's always fun. And have a great rest of your weekend.